Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com, drstoxx.com. Been in business every market day since October of 2002, as you can see from the gray hair on my face and the sides here. And if you want to join us in the live trading room, this is where I'm coming to you from today. Go to drstoxx.com, click on the subscribe menu, and you can scroll down. You can add on the brand new live options room. Well, it's about 7 months old now. It's not exactly brand new, but you can add on the new live options room at a discount. And if you're looking for something more end of day or just even once a week, go to the Stock Pick Advisories link and you'll see the 3 letters that we offer, 2 daily and 1 weekly. All right, let's get started here. I want to go jump over first to finviz.com, which is your good one-stop shop for all things stocks. And it's a good place to go to when you're kind of out of touch with the market. What is going on today, right? What's going on just today? It's not really a broader term view. It's just what's happening today. Here's your heat map, and you can see it is green, 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 green. Now, Friday of last week, today's Monday the 4th of August. Friday last week, that was the 1st of August. It was red, 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 red. The market hit new all-time highs at the open on Thursday. It sold off all day Thursday. It gapped down Friday morning. It sold off all day Friday, and it was a pretty scary drop from the new all-time highs in the morning on Thursday to the close on Friday, and everybody and their mother was saying this is the beginning of something a little more nefarious. Well, if today is any indication, that is not the case. Now, there are some reds out there. Warren Buffett's not having a real good day with his Berkshire. Amazon, for reasons I don't understand fully, is red today, and we've got some weakness in the energy sector. And poor Costco just hasn't been able to catch a bid. We've got some Walmart calls on in the live options room, and they're just doing really well for us. They're in breakout mode today, whereas Costco just keeps going down. So if you know the answer to that mystery, you can let us know. So green, green, green today. After a pretty decent gap up, we've been rallying higher throughout the day. Doesn't mean that we're going to close higher, of course. We've got an hour and 50 minutes of trading left, and anything can happen. But this is a very good sign that the market isn't all that worried about the data that came out last week. So last week we had a huge data dump, right? We had the Fed on Wednesday. Powell not sounding very dovish at all, not even hinting at rate cuts in July. I'm sorry, not July, but at their next meeting, which is, I think, September. And then, you know, it just like we're looking at data, we're not seeing what we need to see in order to start cutting rates. And then on Friday of that same week, this was the Friday that caused the big gap down, the jobs data came out, and it was not good at all. It was a big miss to the downside. And then making matters worse, the previous 2 months were revised way down in a manner I've never seen before, frankly, way down to well below where they came in at on the print. And that's, of course, a big concern because you always see recession first in the jobs data. Jobless claims have been pretty good. So on Thursday, they came in underneath expectations, and they haven't really been ticking that much higher. They're still well under the like 240, 250,000 number that you would typically see when recession is on the horizon, and we're not near that. So that's a good sign. People aren't lining up to get unemployment benefits. But if the economy is so sluggish that it's not able to create over a 3-month period, not able to create as many jobs as it usually does, that's a concern. Okay, so with that out there, then the odds of a Fed rate cut in September ticked up quite a bit to 70%. So there's some concern. There are some genuine concerns out there, but on the tariff front, things are getting better. Deals are starting to be made. Deadlines are starting to be pushed back. Numbers that were really high are starting to come down to something a little more reasonable. And on top of that, this is the important part, we're starting to see some really good benefit to the American economy from the tariffs on imports. We're seeing manufacturing being repatriated. We're seeing hundreds of billions of dollars in investment coming from abroad back into America. And we're seeing the coffers of the Treasury go up as a result of these new import prices. So yeah, you're going to be paying a little bit more, you and I, for items at the grocery store and at Walmart and Target. But hopefully that's a temporary thing, and we can start to work out some deals in ways that will be mutually beneficial. Okay, so that's where the economy is at. Some good signs here. We've got a lot of green participation. We've got over here advancing stocks are up at 78%. Decliners only down to about 19%, and that is exactly the opposite of what we saw at the close on Friday. So we're seeing a very broad participation among all sectors in today's rally, and that's exactly what you want to see. It's not just the mags at the top. In fact, I mean, yeah, there are some good mags in there. We've got NVIDIA on board, and we've got Avgo or we're in Qualcomm, not Avgo. We've got some AMD. PLTR is up against earnings this week, and Microsoft is past earnings and doing really well. Oracle is just doing really, really well. And Facebook is down here. Google's down here. We don't have either one of those guys, but I think Google is probably on my radar pretty closely here. Very soon, we'll get into some Google, either in calls in the options room or shares of GGLL in the trading room. So broad participation, 62% new highs, 37% new lows. That's also good. And we're seeing more and more stocks among the S&P 500, even after a 2-day sell-off last week. More and more stocks trading above the 200 period moving average, and that's what we want to see. All right. So let's jump over to some charts. And we're going to look first at indexes. And we'll take a quick look at these, and then I want to get over to my, actually, let's do this with the ETFs. We'll get over to my my greens list here. Okay, so this is our first level of concern, right? I said in the room this morning that if we got up to close the gap, which we're doing right now as I speak, I better keep an eye on the tape here because we don't want to see a big major rejection at that level. I said this morning, if we get up there to close the gap, that's probably the ceiling for a little while. I don't think we're going to sell off today, but a reversal tomorrow is possible and maybe even likely. And so I think maybe our best bet right here is to start to take off a little bit of our profits. We'll start to, I don't think we should go short. I don't think with that at all. But that's, look at this increasing volume, big red sticks, increasing each day. We triggered through the 21 EMA. We did hit an intraday volume shelf. And on an intraday level, on the hourly and 2-hour charts, we saw some oversold readings and trading down into the pink zone of the LRC, if not below that. So on a short-term basis, we were deeply oversold. Now we're bouncing back up. We're hitting the bottom of the gap, which usually acts as resistance. So now that the gap is closed, we need to see what is the market doing. It could roll back over and go right back down, turn around Tuesday, see a bearish read, and then we're right back down where we were on Friday. We don't want that, but we need to be cautious here against that possibility. So let's look at the QQQ, which I think is really the market that's going to have the better possibility of breaking through that ceiling and getting higher. Why? Because all the best stocks are in AI and tech, semiconductors, and certain software names, and they're just doing really well today. So that part of the economy is not going away, and that part actually some of that anyway, might even benefit from tariffs. It won't benefit from a weak jobs market, and it won't benefit from keeping rates too restrictively high, but it will benefit from everything else. Yeah, because it's just you just can't, we are at the littoral edge, if you know what that phrase means. We're at the very beginning of a new breakthrough in a big part of the economy, and AI / robotics / I don't know, whatever. And the data centers that are needed to drive those parts of the economy, we're just experiencing the newness of that. And so when we had the dot-com era, and then we had the internet era, and then, the internet, then the dot-com, and now we've got, we had Internet of Things, and we had cloud. Now we've got a whole new sector of the economy, and that's not going away. So let's see, what is the level here? We need to worry about 565. And right now we're at 563. So there's not too much room more to the upside before that gap closes. We need to keep an eye on that. The number for SPY is 630. 630, 631, and it's at almost 630 right now. Small caps are actually not doing too horrible today. It was a gap down. It reversed nicely before the close on Friday. One of the best moves in the indexes on Friday was in the small cap index into the close. And it didn't quite, but it almost held the 50-period moving average, which is rising in a nice uptrend. This is the 200-period moving average, and it is above that nicely today, as well as the 50. We are closing Friday's gap, and we're in this kind of no-go zone, I would call it, because this is the broken STL of the uptrend off of the April lows, which are down here. So in this yellow box here, I would just call that a no-go zone. It's not really a bullish area. It's not a bearish area. We want to see it break out to the upside. That could happen tomorrow, but not likely. Okay, we're not long we are long the QQQ. We are not long the S&P or the small caps. All right. Now we are long gold and the miners, which are doing really, really well. It is breaking out to, I'm not sure this is all-time highs for the miners, but it is for gold. And it's a big green stick. We got in earlier today. Nice ride so far at breakout. And yeah, just a beauty. I wanted to explain this little indicator down here, which I'm starting to get a little bit more familiar with. It is a cycles indicator, and you've got long-term, medium-term, and short-term cycles. And the general theory is that your best long trades will come when the long-term trend or cycle which is the purple line here, is in an upswing. Right? When it bottoms out and starts to swing up, from that point on, you're going to get your best, most consistently upwardly mobile bullish trades when that is in that position. Now, when you can couple that with some of the medium term and shorter term cycles, like it did right in this area here, which is this little pivot down here, almost like a pocket pivot, then you get the really good upside starting from that point. So that would be your big buy signal per the cycles. We had the initial leg up, we had the pull back down, and now second leg up should give us a nice breakout. Okay, bonds are green after being a little bit red. They're getting a little bit stretched here. They are at an area where things tend to peter out. But this is what I like about this chart. So we've got a sequence of lower lows, lower highs, lower lows, lower highs. Not a lower low, but a higher low. And now if we figure that is, sorry, I don't have a good straight line there. That's not even very good. Here's your straight line. Now that we have printed a higher low, where you look for a breakout above the most recent pivot high, which is right around here, about 88.37 for TLT. And we're not quite there yet, but we're getting there, and we are long TMF, which we bought a couple of weeks ago over in the live trading room. So I like this. I like this as an end to the longer-term downtrend in bonds. Oh, and here's another thing that might be a factor here, although I don't think they're buying the 20-year, which is TLT, but the government, the Treasury Department, has been buying shorter-term bonds as a way of propping up the bond market and giving Trump what he wants, which is a lower yield. So if that can spill over into these longer-term maturities, then we're going to see a really nice rally in the bond market. That would be helpful for stocks, because right now everybody's chasing income, and that won't happen if yields start coming down. All right, I want to show you a few of my greens list. We're actually doing really well here on time, so I'm going to turn over quickly to the live trading room and ask members there if you have a chart or a ticker symbol you would like me to look at and give you my opinion on. As long as you're willing to sit through my, if I'm bearish and you're bullish kind of thing, that's fine. That's just part of trading, right? There's always someone on the other side of the trade. But go ahead and type those ticker symbols into the trading main room, and I should have some time to look at those. All right, so I have my greens list here. This is a sequence of stocks that I'm especially interested in. Either they're strong growth names that are a lot of fun to trade, or I know that they're setting up quite nicely, or I've seen some unusual call flow come into this name, or they've got earnings coming up and I kind of want to see how they do, right? There's all kinds of reasons why I'm interested in this list. Most of these are high beta names, high growth names, and most of them are a lot of fun to trade, and our best trading setups usually come from this list. All right, so I have these sorted. I can sort them worst to best. Here's your FIG, which is the new IPO that came out on Wednesday, or Thursday rather, and it was running counter to the market, so that's a good thing. But now it's also running counter to the market. It's falling when the market's going up. I wouldn't mind getting on a little bit down here below 85 or around 85, which is kind of where it opened up that day. I missed the open. I didn't even see it. And by the time I blinked, it was up here around 115, and I wasn't going to buy it up there, and I'm glad I didn't. So we'll see where that goes. A circle, it's on my no-go list. It just keeps falling. I do have a fib retrace on the low today at 50. That's the initial big move up off the IPO open, and yes, it will have a moment very soon because it's getting really, really oversold, and the fundamentals don't really support too much more downside. But every time I get on board, I think this is the day, and then I get stopped out. So it's a no-go zone for me personally, but I do think it's pretty close here to a near-term bottom. All right, so I didn't want to talk about those. Let's talk about these guys up here at the top of the list who are doing really well today. Here's a perfect example of a nice-looking setup that has earnings a little too close for us to trade it. So, here's your pullback. This is not actually the best setup because it's a little bit of a double top right here, right? Double top. And it came back down and broke through the fulcrum, which is not a good sign. Fortunately, it didn't hold there. Friday was a down market day. It was up for this is an AI play. It was up for Big Bear, and then it was a gap up and go today so far with the breakout of the pullback trend. So it's not horrible. It's just that there are better setups, which I'll show you in a minute. I'm not so sure I would buy this so close into earnings, but and you look at our cycles trend, it looks like the long-term trend is just about ready to bottom out, but not quite there yet. And we've got the midterm and a short-term cycle getting close to the bottom as well. This is one I really like. I really like this setup. So I was posting this one several times last week. This is a firm. It is a nice-looking RTL, right? RTL is your resistance trend line over the top of the pivot highs, and it has a very consistent, tight STL, supporting trend line. And we were looking at this on like Wednesday of last week and then Friday of last week on the gap down. When the market was falling down to lows of the day, this was rising up to highs of the day, hitting the trend line above the 50, still in a nice uptrend. And then it gapped up and it just kept going today, and it's in breakout mode. So I don't like to buy big green sticks. This violates my big green stick rule because more likely than not, you're going to get a better price the next day. So I would have some patience and wait for stock to come down, maybe to about 71.30 or so. It's a couple of bucks lower than where it is now, but this looks great. If you're already long, if you took my advice last week, which I didn't take myself, I'm not in shares, but if you took my advice last week over on StockTwits or Twitter, you're enjoying this very nice ride today. RGTI is, in my opinion, the best of the quantum computing names, the pure quantum names. And look at this. This is such a beautiful setup. So you have a nice, not a strong uptrend, but a nice increasingly strong uptrend. You've got several bullish things going on here. So you've got a rounded bottom. You've got a, if we put, I hate this when the, here we go. So That is your RTL, right? All-time highs back here, really, really strong move into the beginning of the year. Here's your lower pivot high. Here's a third lower pivot high or second lower pivot high. In between is a rounded bottom. Then we printed this higher low, and then we had this nice big breakout, and I don't know exactly why that happened, but it sure did. Now, we are consolidating that big breakout move with a bull flag. It came down to near the 50. Not too bad on Friday when the market was selling off, and now it's a reversal, a 3-bar reversal, breaking out of that bull flag. This could be bought today only. It's got earnings on Tuesday next week. All right, well, you can hold this for a week. That's not too bad. And earnings are in the evening, so you could buy this now and sell it Tuesday next week. I actually had some shares of this from an old trade we were in from the live trading room, and I got stopped out on Friday, which happens, right? It happens. All right, GLXY is not one I normally trade. It did make a Fibonacci retracement down to the 0.5 level, and it didn't even get below the 21 EMA. One day it got right down to the linear regression midline, which is in a strong uptrend about all you can hope for on the pullback. Let me just get rid of this stuff. Oh, come on. Where's my remove drawings? Okay. So big upside move, and then a little bit of a falling wedge or a bull flag into the 21, and a nice reversal and strong price movement today that could be bought. Earnings are quite close. So we're in this one, this little guy, $2.50 in our momentum letter. We got in at the open. It's up 10% right now. It was up quite a bit higher. It was up above 280. Now it's 264. But this looks very good for a breakout move. Right there, breakout. And there's your supporting trend line. Okay. GFI is in the gold mining space. I like the gold mining space. It is one of the strongest sectors right now, and the gold mining stocks, including GFI, what is it, AEM, forgetting the name of the company, Anglo-American? No. Anyway, AEM and NEM and RGC and, there are several others. They all have amazing Investors Business Daily metrics, right? They're at 99 comp. They're at 99 earnings. They're at 99 relative strength. They're as good and as hot as you can get. And here's this guy breaking out. We're in this one in one of my letters. I think it must be the trend trade letter. We bought some hood this morning. It was up at around 103. It's now 106. And this is a beautiful breakout. And this happens to be one. It's not quite a breakout, but it is a nice little soft pullback after earnings. So this is one we don't have to worry about earnings now. I like that fact. And if we zoom in a little bit, you're going to see a very strong thrust uptrend, bull flag pennant, whatever. Another thrust uptrend, bull flag. Now we're just starting today on a very good move on Friday, all things considered. We're just starting today a new thrust up. That looks good. I really like IREN. I have some long-term shares in the family fund. It is a very good investment grade trade on data centers. Used to be a Bitcoin miner. Still does that, but that's not very profitable these days. So it got into data centers and it's doing great. Inking all kinds of new contracts. 3-bar reversal off of the 50 Fib retrace, and we probably should get in this one as a swing trade over in the live room or option calls over in the other one. We did buy some MSTX inside day bar down here after a big drop into the pink zone of the LRC. Bitcoin is back up green today, and hit all-time highs just a couple of weeks ago. It's been kind of in consolidation or discounting mode ever since, and now I think it's back on track, and this is a good way of playing that. Upstart is a nice setup, but has earnings. This little pullback, a little soft pullback. When the market's cracking down 3 or 4% in a couple of days, which it did in the small caps, and it was 2.5% in the S&P. When the market does that, but a stock like this just barely traipse through the lows of the range, that's very good. That's a very bullish sign. And I like what it's doing today. The only thing is earnings are tomorrow night. So we'll see how that one looks after earnings. Okay, and the last one I want to show you is TEM. And it's not the best chart out there, but this is a Cathie Wood play. There's something else going on with this one. I'm forgetting now. This is a government contract. Anyway, it's got earnings coming up in a few days. I'm not going to play it before earnings, but I do want to see how it does. And it's giving us a nice 3-bar reversal off of the 200 period moving average and the pink zone of an uptrending LRC. So all of that's good. You can see down here the cycles as well, starting to get a nice uptrend in the long term with some getting close to oversold. You can see that better now in the shorter term trends. Okay, cycles, I should say, cycles. Oh, last thing I wanted to show you, this is a bit of a tip. So manufacturing has been in a contraction mode. It's in a recession. There's no doubt about that. That's changing with repatriation and, with $500 million from Apple coming over and building new production facilities here, in addition to even foreign companies starting to invest, Saudi Arabia among them. So we're going to see manufacturing catch a good bid. And I like the industrials and I like the materials sectors. Both of those have been laggards for some outperformance over the next few months. But when you're kind of worried, like, is this the beginning of a recession? We had a ISM, which was recessionary. We had jobs data, which was recessionary. And so we kind of have to ask, are we actually in a recession, or are these just some early signals that will fade to something a little bit better down the road? We don't know the answer to that. But one of the ways you can kind of give a good reality check on the recession is happening now crowd, and that is you go to look at a few stocks that if we are in fact in a recession, they shouldn't be doing very well, right? What are stocks like that? Well, Carnival Cruise, for example. Let's take a look at that one. No one goes on a cruise if we're in recession. Carnival is kind of the main line for the average Joe. It's not the luxury line. It's not Norwegian. It's the line that's sort of somewhere in the middle, and in terms of its luxury status. And that's it's the middle class that's going to be hurt the worst in a recession. They're not going to be buying cruises. So let's take a look at the chart. It shouldn't be this strong. It is pretty strong. It is up here at least 52-week highs. It's in an uptrend. The MAs are stacked, and it's banging up here. Actually, this is a very nice looking setup. Very nice looking setup, right? You've got your highs of the range up here, and you've got a sequence of higher lows going on there, and that's a nice looking ascending triangle as a tight base. You need about 3 weeks for that. Looks like we've got about a month. And yeah, this should be good. This should rally up into earnings. So Carnival should not be doing well if we're in a recession, but it is doing well. So scratch that thesis. You can look at a couple others, right? You're not going to go to Las Vegas Sands if we are in a recession, right? You're not going to, well, maybe you are, because you're going to gamble your money away. But again, here's the April lows. It's just been trending higher ever since. This is a strong uptrend off of those lows. Everybody was down on tariffs, so we can discount that. And this one isn't quite up at 52-week highs, but it is rallying when, if we're in a recession, it shouldn't be. And a third one you can look at is Expedia, right? The travel agency. Okay, this isn't as strong as those other two charts I just mentioned, but it's not down near 52-week lows, and it is actually printing a very nice looking reversal off the 50, the 200, 3-bar reversal. The market likes it today, right? Big upside today. It's up almost 4%. Big upside today, and the market wouldn't be happy with Expedia if they thought recession was coming, okay? So those are some things you can look at. Now, gold is rallying today. That could potentially be some recession fear. Bonds are rallying today, sort of. Not that great. They were red earlier, but now they're green. That's sort of a flight to quality. But yeah, we're still not seeing signs in the overall retail economy that recession is here right now. It might be coming, but it's not here. All right, that's all I wanted to let you know. It's now 2:38, so I did go a little long-winded there, but let me just take a few minutes to look at some ticker symbols. We did Hood, and let's look at Duolingo. Okay, I haven't looked at this one for a while. It was on my list of growth names because it was on the IBD leaderboard for a while. You know, when it was back here doing this nice uptrend, right? Consolidation, uptrend, consolidation, uptrend, consolidation, uptrend, consolidation, uptrend. Really nice uptrend. It got whacked on earnings, and then it recovered nicely all the way up here to 52-week highs, maybe all-time highs. Way up there at 540, and now it's down to 352. That's a big slide. Not exactly sure why, but I do know that, well, I know there was a bit of backlash at Duolingo when they kind of went maybe a little bit too woke for the market. I use Duolingo to learn some Italian, and I haven't seen maybe a little bit of stuff in the the cartoon figures they use. If you've ever used it before, you know what I'm talking about. I don't know. It could be more something systemic with the company in terms of its business model. But the fact that a company can get all the way up there in such a short period of time indicates that the growth here is still very strong. And maybe there's a lot of competition coming in, right? Because when you are interested in Duolingo, you start seeing ads on Twitter and Facebook from competing companies doing the very same thing. And they all have their unique selling points. So maybe that's it. It's got earnings coming up. I wouldn't hold it over earnings, but just from the chart, I don't see anything in the chart that suggests it's going to bomb, other than the chart is down here near some range lows. So yeah, I don't know what else to say about that. It is in a slight uptrend, but it's below the 200. That means a longer-term downtrend. The short-term downtrend is clear from the 21 EMA, which is falling, and the midterm downtrend is clear from the 50. So really, realistically, you kind of want to wait for a little while. Whatever happened here on earnings was a beautiful uptrend. I mean, a beautiful big gap up. But then, for whatever reason, that gap got closed in, and when the market does that, that's not a good sign, right? So the day after earnings, right, it's up here at 484, and the market is saying, hey, you're no longer a $300 stock, you're a $400, close to $500 stock. And the market continued on that trend all the way up to 560, 540. Now it's down at 350. So something happened after earnings to make the market fall out of love with this stock. And until that changes, I would just avoid it. It's a no-go zone. I'm going to call it that. Let's see what else. KRMN. Carmen Holdings. I don't know this ticker symbol. I don't know the name of the company unless it's the Harman Kardon of speaker fame, but I'm not sure that's it. But I like this chart. Now, it's a gap down a few days ago after hitting a new IPO high. That's never a good thing. The gap hasn't been able to get closed. That's not a good thing. But I have to say, given that it was a 2 to 3% drop in the market last week, and it looks like this is pretty flat, that's good. It's holding the 21. That's good. The 21 is above the 50. Both are rising. That's good. The LRC is showing a nice, strong uptrend from the IPO back here. And yeah, I like this. It opened up at around 30 and got as high as 57, 56. And it's pulled back into 51. So it does have earnings coming up. I'm not so sure I'd be holding over earnings as a swing trade, but I do like the chart. It's other than that gap, and you have to kind of figure out what was going on there. It may be a downgrade. Maybe they lowered expectations. Who knows what? But that's a concern. Okay, bullish overall, but yeah, near term maybe a little problematic. Let's see. All right, I don't see any other ticker symbols, guys, so one more here, LOAR, and then we'll finish with this. I don't know this ticker symbol either. Loar Holdings. Let me just take a quick look. Let me. What was it? Carmen Holdings, Aerospace and Defense. All right. Well, that's probably not the speaker company, but I like that sector. That's a good sector to be in for sure. And LOAR is also the same thing. Okay. So similar sector, but not the same chart, right? This is, as you can see, this is a lot weaker. 21, 50 are falling. 21's below the 200. It's below the 50. This is a short-term, mid-term, and longer-term downtrend. Not such a good thing. It does seem to be putting on the brakes down here in terms of falling, but here's how you play it. So if you've got something like this, where you have a sequence of lower highs, lower lows, we just went over this, right? Then what you're looking for is a higher low to print, and then a breakout over the most recent pivot high. Until you get to that point right there, I wouldn't be a buyer. You can start to nibble, right? If you see this lower print here, I'm higher low, and it starts to travel north, right? Okay, you can start to nibble on shares because that downtrend is likely done. The other thing that you can do is you can put a RTL over the tops. It's kind of hard to know where this goes because you have that little anomaly right there in the middle. I would put it right there, and I would say when that breaks to the upside, when you get a close above that, and not that that's a guarantee. In fact, we see a lot of these breakouts after a long-term downtrend like this. It breaks out, and then it comes right back down again. So be careful of that entry. I would rather you do the higher low, nibble, and then on breakout, you add some more. All right. That's going to be it, guys. I'm going to let you go. God bless everybody. I'll see you back in the room after I produce this, and we'll continue trading the last hour plus of our day today. God bless everybody. Bye for now.